Well, let's take a look at the markets. We have stocks recovering as the Turkey trade worries calm, but the fallout still impacting some of the sectors here in the U.S. markets. I just want to take a look at the screen. We have the Dow up 364 points. The S&P also up nearly 1%, as well as the NASDAQ. Bob Iaccino of Path Trading Partners is standing by at the CME. And Bob, I want to first talk about what's going on. The biggest story before today has been about Turkey. We've seen a lot of volatility here in the markets because of the crisis that's been going on with Turkey. Do you think that some of this worry that we've been seeing over the last several days is a bit overdone?
I think it is when you look at Turkey. People have been pointing out that Turkey's economy is about 4.4 times larger than Greece's. And Greece was a crisis that kind of sustained for months at a time. But it's different because Greece had a debt crisis. Turkey did not have a debt crisis. Really, Turkey's currency crisis kind of became a crisis when President Trump doubled the tariffs on steel and aluminum. That's when the lira really took off to the downside, and you really started to get fears of contagion. Italy's bonds started to suffer. Spain's bonds started to suffer. You get the Qatari commitment of $15 billion to sort of stabilize the market. You have the potential for the American passenger to be released. I don't hear anything about that, but you have the potential for that to happen, which potentially would release the foot on the back of the neck that caused the crisis in the first place. So I think overall, yeah, it's a little bit overblown when you look at Turkey as the reason. The big reason to sell equities is if China doesn't get any better, and at least as of this morning, it looks like we're getting this much better.
Hey, Bob, Dion Raboin here. You know, I've been talking to a number of traders about whether there's contagion risk from this Turkey thing or not. What do you think? Is there any real risk for other markets, whether it's emerging markets or markets more globally?
Well, I think there would be contagion risk, but it would be contained to Spain and Italy. I mean, that's where you see the real sort of interaction from weak economies with Turkish banks, Italian banks, and Spanish banks. You see it in other economies. Germany has some risk. Turkey's agreed to talk to Angela Merkel sometime next week. But Germany has a strong enough banking system. Same thing with the UK. Clearly, it's the same thing with the US. So we're not in a situation where we were during the Greece crisis, where we talked about the pigs, Portugal, Italy, Greece, and Spain being the problem. The contagion would be contained if it happened. So that, by definition, is not a contagion.
Hey, Bob, this is Brian Brenberg. We're having a conversation around the table about whether markets are reacting too positively to the news about China and U.S. trade negotiations. I happen to think they're actually reacting positively because the tone appears to be a little bit different here, and there actually is some hope that something might get done, especially given some of the weakness in China we've seen of late. Do you think there's an overreaction here, or do you think something has changed in the negotiation?
So whether I think the reaction by the markets today is appropriate or not, I don't think is relevant from what I do for a living. Really, what we've seen over the last 10 days is when there's not a negative headline, that underlying momentum of I want to buy stocks that have a blended earnings growth rate of 24%, I want to buy those. We get a negative headline, we sell off. We get no headline, we rally. Now we get a slightly positive headline, and we rally like crazy. So that momentum is still playing out. But when you look at it realistically, we're still 4% away from the Dow high. We're still 1.5% away from the S&P high, 1% away from the NASDAQ high. This is not enough to get us to new highs, but it's following that same sort of pattern where the momentum for being bullish the U.S., which is the best house on the block, is the underlying tone. So if we get no news or good news, you're going to see these moves.
Hey, Bob, Dion again. Wanted to get your thoughts. We've been showing the oil futures markets, and I wanted to get your thoughts about maybe a move from some countries like Turkey towards these China yuan-denominated oil futures. Do you think that this could be the kind of thing that accelerates that move in the global economy?
I do, and I'll tell you what, from a crude oil perspective, I speak all over the country, and when I talk about crude oil, I do the comparison of the crude oil contract to the crude oil names, right? And if you're going to trade crude oil, guess what's 100% correlated to crude oil? It's crude oil. And crude oil right now is about to get into a new downtrend, partly because of what you mentioned, Dion. There's going to be plenty of countries using plenty of crude oil that is not going to stop working with Iran, despite what this administration asks it to do. So there's going to be more of a flood of supply. That sort of pricing in of Iranian oil not being on the market is not going to happen, in my opinion, to what the market has thought it's going to be. You add the end of the summer driving season, and then you add the continued growth of U.S. shale, although that is slowing on a barrel per rig basis. You're going to see crude oil prices lower. That's going going to help the global economic picture, and unfortunately is going to give a little bit more cover to this trade war. The trade war can go on longer if crude oil prices fall.
All right, Bob Iaccino, thank you so much for joining us today.
Good to be here.